Well, the Sensex and the Nifty regained half of last week's losses, gaining 1% each, with banks gaining in tandem with the blue chips, but the mid-cap outperformance is something that continues. The mid-cap index soared 4% last week. Hello and welcome to the Editor's Roundtable. On this week's edition, we decode IT earnings, which was the talk of the town all week. We put the spotlight on Vodafone Idea's FPO, and we take a look at RBI's regulatory action and tell you why it's been a quiet phase one of voting. I'm Sonia, and with me the editors Prashant, Nigel and Nimesh. Also in the newsroom I have Harish Krishnan, the co-CIO and head of equity at Aditya Birla Sun Life AMC. Harish, thank you so much for joining us on the show today. But folks, it has been a really good week, right? The bulls came back, at least through the course of the week. And there was so much buying through this month from domestic institutions as well. Just goes to show the strength of the retail fraternity.
I mean, locals have been big buyers, right?
Yeah.
Foreigners have been selling. But I'll just take yesterday's example. A 300-point rally from the day's low. We were talking about how FIs were short big time, about 1.5 lakh contracts. And we got that 6,000 crore positive number from DIs. And FI is forced to cover very furiously. The question is, we just had Ramdev Agarwal on the show earlier. He said that elections don't matter for the locals. Hum to yahi hain. Yeah. We're going to invest here, we're going to buy here. It matters for foreigners who own about 17-18% of the market.
Correct.
And the big thing with elections is, I mean, with continuity, that money actually may start to come back. So,
but you know,
that's
just to add to that point, this time the only difference is the FI holding is at a all-time low, right? Yeah. So in that sense, if it's a positive outcome, it's only going to be a positive from a flow perspective, that the foreigners will come in and they'll invest into the Indian market. So from that sense, the risk is not much, you know, from a flow perspective. That's something we need to take
note of. Not outflow. The positive is if there is going to be inflow.
Well, so let's do a quick recap then of what went on in the week, and then we'll get Harish's opinion as well. So for the week itself, domestic cues, they took center stage, and they managed to overpower any kind of global jitters that we saw, whether it was geopolitical issues or hawkish commentary or hawkish data point that did come in from the United States. That's stronger data, which is termed as hawkish in terms of the action that is expected from the Fed. The Nifty and the Nifty Bank, well, they were up close to 100%. You'll say, well, pretty well done, right? But the real action is in the broader markets, and that's not just for this week, but even for the month so far. For this week, the mid and the small cap indices were up 4%, while the Nifty eked out some gains. So that's telling you that the broader markets, well, they're up and running. The only problem for me is, the India VIX cracked 20% for this week. So two ways of looking at it. One is we are setting ourselves for a big bullish run. The problem is, are we getting a little too complacent? That could be one factor that you would like to look at. But I would lean more towards a bullish, bullish move coming, say, in the next couple of months or so. RBI action, well, that hurt Kotak Mahindra Bank. So that one was the biggest loser on the Nifty. The biggest gainer, by the way, was Axis Bank. 10% apiece in different directions. So Axis was up 10% for the week, Kotak Mahindra Bank was down. And we're talking about themes that did well. Pharma did very, very well. You had Divi's, you had Biocon, both of them up more than 10%. And from the metals pack, that PSU and metals put it together, it's being a good combination because SAIL, MOIL, both of them were up and running. So I think the Nifty really is in that broad band, 500-600 points odd, but the real action is in the broader markets. How are you reading it, Harish? And at one point of time, everyone said 21,700, are we going to go a little bit lower? Well, we have bounced close to around 1,000 points from there.
Right. So yes, as you rightly pointed out, Nifty has been in a slightly more settled range, whereas the action clearly has been at the broader pack. So clearly, markets in the medium term, we don't really take a near-term view. In the medium term are driven by three factors. You've got earnings, which is fundamentals. You've got flows or liquidity, and then you've got sentiment, which could be, other alternate asset classes, their interest rates, etc. Now, if you look at where each of these are slotted, I think earnings, we saw a doubling of earnings in the last 3 years. Our sense is that the next doubling of earnings could be between 6 to 7 years. So we're not going to definitely be doubling on this base over the course of the next 3 years, but it's going to be still over a 6-7 years, which is still one of the highest, relative to the world. And this is underpinned by a strong balance sheet of corporate India, the great investment boom that we are seeing in India, and as well as the structural demographic dividend that we are reaping, right? As far as flows is concerned, our sense is that clearly while SIP flows are strong, continue to remain buoyant, they are more the foundational flows. What matters to the marginal price now is driven by what the HNI thinks and what the FII thinks. And I think HNIs have been extremely exuberant. They continue to have record positioning in the markets, and they're continuing to add on to those positions. and clearly the electoral verdict is a big sentiment boost. FPIs as well are looking for that certainty. So in the near term, possibly that could be a catalyst for incremental flows, which can lead to that rally. Sentiment is where I think we are a bit wary of, because currently we are in a zone where nothing can go wrong. We are at that extreme exuberance. Global interest rates have gone up quite significantly over the course of the last month and a half. I don't think India has ever has felt that shock wave that is happening out there.
You think we will feel that shock? The 2 year is at 5%. Last time we were at 5%, the US market sold off 10%. Right? Recently, a few months ago. The US is about 4-5% off the highs. Do you think there is, if it sustains at 5% for longer, it causes some problems?
See, it's obviously hard to call out when that needle will prick. But I think we are watchful for two other developments globally. One is what's happening on the Chinese yuan. It's been on a peg for a long period of time and it's starting to slide off. I mean, Indian currency has been rock solid over the course of the last 2-3 years. It's been one of the most stabler currencies, and in some sense the correlation when we do our numbers, it is now more aligned to the Chinese yuan than the US dollar. So therefore, any ripple that happens on the Chinese yuan can have a meaningful impact on us. The second and the bigger thing is the
yuan is weak. So you're saying the rupee, it could...
So it is stable for now. But if the yuan were to crack, then Indian currency may also follow. So that is one thing that we need to watch out for. Do we know when it will happen? The answer is clearly no. But do we need to have that in the back of our minds? Clearly yes. The yen is the other big variable, because there's a lot of carry trade. We've seen a massive slide down there, and that is again something that we need to watch out for. So I think while the US is what hogs most of the headlines, I think it's these two markets that we look for from an Indian market perspective. And you know, currently, of course, it doesn't seem to be impacting, but we'll have to wait and watch out.
Okay, you know, the big talking point this week was the tech earnings, right? So I just want to talk a little bit about that, then I'll toss to you, Harish, for your view. Major players, Infosys, L&T Tech Services, reported their numbers this week. Now, of course, have reported subdued guidance as well for FY25. But let me talk about the big stock in focus, which was Tech Mahindra, right? It gained about 8%. Now, the company spoke about how FY25 will be a turnaround year for them. And the big focus is going to be on cost optimization. In fact, we also during the day spoke to, Nitin Rakesh of Infosys, who said that shorter duration deals have now picked up. And shorter duration deals are early signs of discretionary spending. So that's another big takeaway. The other thing that we learned is that the communication sector is still struggling a bit. So both Cyient and LTTS spoke about that. Cyient said that the conditions in the market call for some prudence. The communication sector has not recovered. There's a delay in client spends. And LTTS also spoke about concerns both in the industrial products and the communications industry. They said industrials is impacted due to higher interest rates and communications is weak because private 5G is just not picking up. So the summary of it all was that there is no real improvement in the macro environment. The FY25 guidance is subdued, Infosys, LTTS and Cyient, but the companies are now focusing on investing for growth and the margin guidance is getting pushed out. What is your biggest takeaway bid? And for somebody who's invested in this sector, in IT, what should they do now?
So we think that IT is still in a constructive zone from a 2-3 year perspective. Okay, see, ultimately stock prices are slaves of earnings, and when we look at earnings, it is relative earnings to the rest of the pack. So if you look at profit pool share of the IT sector as a percentage of the total top 1,000 companies, that number pre-COVID was close to about 12%. During COVID, during that boom, it went to 15% of total profit pool. And today it is at 9%. So the question really that one has to think of when one is taking a 2, 3, 4 year kind of a view is whether the 9% is likely to go to 10, 11, 12% or it's going to stagnate at 9 or it's going to crumble down to say 6, 7% of the total profits. Our sense is that most management teams are reasonably cost conscious in the sense that margins have come off quite significantly from a pre-COVID level. Once they are clear of the demand environment and they are all waiting for that recession to come through or the slowdown to come through, I think there's going to be a massive tightening of the belt and margins are likely to go back somewhere close to pre-COVID levels. Over the course of the next 3 years, we do think that spending will come back, and therefore a combination of both of these makes us believe that the end profit pool share is likely to be higher than the 9%. And therefore, we think that these are opportunities for us to participate in and to accumulate rather than to get worried about whether, hey, FY25 guidance is poor. Because we were never really anticipating anything great. Of course, it's been softer than even our subdued expectations, that no doubt about that. But I think the gameplay that we are playing for is maybe slightly more longer term at this point of time as far as the IT sector is concerned.
Okay. Well, the Vodafone FPO, that was the other big talking point, right? The shares opened at a 7% premium on the bourses. The cash-strapped telecom company raised 18,000 crore rupees via the recently concluded FPO. Aditya Birla Group Chairman Kumar Mangalam Birla actually called this the beginning of Vodafone Idea 2.0. But Nigel, what does the FPO mean for the firm?
Well, Mr. Birla's body language itself is telling you that he's back and he's here to battle. But let's go across to the wall and run you through these details. Well, Vodafone Idea, they've survived for now. Will it revive? And then will it thrive? That's the important point. So for the time being, survival is something that the street is working with. They came out with this FPO, 18,000 crores odd. They got demand of more than 1 lakh crore. And the overall issue was subscribed close to around 7 times. Why was this important and why was the FPO such a big success? Well, I'll put down 4 big reasons. The street is working with a 15 to 20% tariff increase after a few years post-elections. The second factor is the promoter entity, they pumped in money at a premium, more than 14 rupees, and then the FPO was priced around 10, 11 rupees odd. So the pricing they got right. The third factor is the street is a little bit optimistic that Jio will come at some point of time to list in the market. So that could be another driver that got so much of interest into this particular FPO. And finally, IIFL, they're saying that maybe there could be some kind of reduction in the AGR liability. So that's an outside chance. But those are the broad reasons why, in fact, maybe that this FPO did do well. What does this do for Vodafone Idea? It paves the way for some bank funding, 25,000 crores odd. It gives them growth capital to, pump themselves up with regard to 4G as well as 5G and make them more competitive. And finally, they've been losing a lot of subscriber base. So it helps them arrest that decline and maybe try to pull back some part of that subscriber base. Now let's break this up for you. What is the money that they have at their disposal? Close to 45,000 crores. Break that up. FPO, 18,000 crores. Promoter infused 2,000 crores. And you have bank funding. So they have so much of money with them to live to fight another day, so to call it. And for the next couple of years, they seem well placed. The debt in their books is more than 2 lakh crore odd. But at least they have this money for the time being. What are brokerages making of it? Well, Nuvama, they upgraded the stock, target price around 14 rupees. They're saying that the company now is, is some distance away from a going concern to investable idea. So for the time being, it's the going concern. But to become an investable idea, we'll require to see more traction on ground. And CLSE on Indus Stars, that was a play. If Vodafone Idea survives, then Indus Stars will be a play. The stock has seen a big rally. They have upgraded it, but they're saying even at the target price of around 450 rupees, it trades at a sharp discount in comparison to its global peers. So the telecom space is going to be the sector to watch post the elections. All these stocks will be in focus. For the time being, Vodafone Idea has survived. Will they revive and then thrive? Time will tell. Well, Harish, I want to come across to you and ask you, what's your view on this particular one? How do you see the telecom space, panning out? FPO was a success, but what happens from here on?
So we do think that there will be further tariff hikes, possibly 1 or 2 in the near line of sight, and that obviously helps the overall sector cash flow dynamics as well. We do think that we are more likely to be in a 3.5 player market than what most people kind of envisaged before this massive amount of fundraise, and therefore. We are enthused by the overall sector in terms of its ability to throw out cash flows and to redeploy that at reasonably healthy clips of incremental ROIC, because this is a sector where return on capital employed has been extremely poor over the course of the last 15 years for all the major players, right? Most of them were loss making for massive amount of time. I think this could be a time frame where we're going to see the reverse, wherein a lot of them would end up throwing record dividends, record buybacks. So I think there's going to be a change in the fortunes of the overall sector, which has done very well over the course of the last 3-4 players, and now it's going to see some kind of a new equilibrium, so to speak, between each of these players.
Okay, all right. So that's
we just had Roundtable Agarwal with us on the program on Vodafone. I asked him about Vodafone Idea. He said he should not be. No, the second. So I persisted and I asked him again. He said it should no longer be seen as a MNC private company. He said it's a it's very clearly, of course, they already own 33% before this FPO, but it's a company which now very clearly has government support.
Yeah, absolutely.
So survival is, he said, assured, which is what you're saying as well. But thriving, how well they do, I think that is something we need to watch out for.
All right, let's do one thing. Let's take a short commercial break. On that note, we'll continue to decode all the action in the market and take a closer look at the voter trends this election season as well. Stay tuned. Welcome back to Editor's Roundtable. Well, the RBI has cracked the whip on many financial institutions in the recent past due to non-compliance. After Paytm Payments Bank, the Reserve Bank came down hard on Kotak Mahindra Bank this week. Nimesh has more on that. Nimesh, you've decoded the RBI's action against financial institutions in the past 2 years. Take us through that.
Well, Sina, normally we've seen that whenever there is a regulatory action on a particular company or a particular institution, the stocks tend to underperform. But, first the case is Kotak Mahindra Bank. We saw a big setback for Kotak Mahindra Bank this week when RBI has cracked the whip on the bank. They've said they're going to bar the company from onboarding any new clients digitally as well as issuing fresh credit cards. So that's been the clampdown on Kotak Mahindra Bank, and that's the reason why it was the biggest 12% down in 2 days itself. Yesterday the stock was down 10%, and today it was down 2%. So it's just a beginning, but the stock was already down 12%. But if you just look at the past history of all the other financial institutions where there's been an RBI whip, look at HDFC Bank in December 2020. RBI had asked to hold all the launches of new digital businesses and also sourcing of new credit card for HDFC Bank. And what has the stock done since then? Since the RBI whip, the stock is marginally up, just 5%, but largely it's been pretty much flat to negative. The last 1 year, the stock is down 10%. Same is the case with the other institutions as well. Look at Paytm. Twice there has been a clampdown from RBI. In March 2022, they were barred from onboarding new customers, and in Jan 2024, there was a termination of nodal account and payments bank services as well. What has the stock down? It's been a massive underperformer since that thing. 53% down since the whip from RBI. In fact, in the last 1 year itself, the stock is on 42%. Same is the case with others as well. Look at the next example. M&M Financial Services. Even they, in September 2022, they were barred from carrying out recovery and repossession processes. Even this stock has relatively underperformed. Well, the stock is has recovered 25%, but if you look at a longer period, in the last 1 year, it's been pretty much flat in terms of returns for M&M Financial as well. The next stock on the list is IIFL Finance. That's a recent instance. In March 2024, there was a clampdown on IIFL Finance as well. They were stopped from sanctioning gold loans. What has the stock done? The stock is down to 32% ever since that RBI clampdown came. And in fact, in the last 1 year, it's been up 1%. But again, it's a recent instance. So the stock has actually underperformed, which is IIFL Finance as well. The next is JM Financial. Even for JM Financial, there was a recent RBI action. Even they were barred from financing against shares and debentures, and even that JM Financial, since the RBI announcement, has actually underperformed. Even that stock is down 35%, 17% since the announcement came. In fact, we have a very small history for that, but again, it tends to underperform. However, there has been one outlier as well, and that is Bank of Baroda. Well, there has been a big move in the PSU banks, but even Bank of Baroda, there was a RBI action. They were barred from onboarding customers for the digital, which is Bob World. But that stock has relatively outperformed. Since that RBI announcement, the stock is up 21%, but in the last 1 year, the stock is up 42%. In generally, we've seen that whenever there is a RBI action on financial institutions, the stock tend to underperform. And again, that's the whole point, right? That should one buy the falling knife? Maybe the history suggests the answer is no. Krishnan, you've been holding into all the financials. What's your take?
So in some sense, this is reminiscent of, say, the US FDA crackdown in pharma,
exactly,
wherein there are these idiosyncratic moves that keep happening every now and then for various.
US FDA, at least investors know that there's going to be an action, right? Here, though, it's all of a sudden, IIFL after the announcement was half. In 2 days, Kotak Bank is down 12%.
So it does increase the risk premium for the sector as a whole, right? But I think one has to see the context of where we are coming in from. See, I think some time back when I was on CNBC, we had said that, banking sector profits as a percentage of GDP were at a 25-year high. At 1% of GDP, right? So therefore, the regulator is using the strength of the overall banking system, which can actually afford to take slightly longer or slightly more bolder investments into technology, into compliance, so that they can see a longer runway of growth into the future. So while, yes, there is a temporary setback, but I think banks as a whole will come back even stronger with all of these checks and balances. So I think it's more a question of timing and possibly the series of interventions that have come through, but that's the way it is.
Okay, all right. So we've spoken a lot of sectors and stocks, but one factor that the markets are looking forward to is elections, and Prashant's going to address something interesting.
People have been complaining all across. It's a quiet election. People have been. So we spoke to two journalists in the morning. They were saying that we will travel to Karnataka, this state, that state. और कहीं पे कोई शोर नहीं है. It doesn't seem like an election. So political pundits and even some in the markets, financial markets, who take cues from elections and political events like the general elections are talking about how this is a quiet election. So far, of course, at least. How the voter turnout this time around as compared to 2019 is on the lower side, lower than expected. Why does it matter? So let's just quickly look straight into some of the data points. The total seats, of course, are 543, right? Seats that went to poll in the first phase, and we only have full data for the first phase. For these 102 seats, the average turnout was 67%. For these 102 seats back in 2019 general elections, the number was 71%. So there's been a drop, which we've seen, of about 4% or so. Voter turnout is lower in the Hindi heartland states. And the question which many are asking is, because the BJP is so strong and dominant in the Hindi heartland states, does this put the party at a bit of a disadvantage vis-a-vis other parties? What happened in 2019? I think let's just rewind the clock back. BJP won 40 seats out of the 102, which for which polling was done in phase one. Only 9 out of the 102 seats which went to polling this time around saw an increase in voter turnout in 24 as compared to 2019. And the states will come up where, there's been a larger drop. These are UP, Uttarakhand, Bihar, Rajasthan, Maharashtra, and MP, average drop of 5.2% as far as turnout is concerned. And non-Hindi heartland states have seen a lower dip, which is about 2.8% or so. What could be the potential reasons, right? The heat wave, it's hot out there across the country. It's been discussed quite a bit. Coincides with wedding season, festivals, but that always does happen. And voter fatigue, complacency, but that's a question mark. It's more of a question at this stage. IIFL equities, and this is actually, a crucial part of this particular data point. IIFL says that the voter turnout, the lower voter turnout, will and should not make a difference to what the BJP can retain and actually even gain. And why do they say that? They've actually looked at all of the 40 seats which the BJP won out of the 102 which went to poll back in 2019, and they compared some numbers. And what they found is that for these 40 seats, the gain that they saw, BJP saw vis-a-vis the second party, the number 2 party, was very large. And this gap between BJP and the number 2 party is enough to offset any drop in voter turnout. So their assumption is, even if you assume that this entire drop in voter turnout goes against the BJP, the lead in these 40 seats for the BJP, in favor of the BJP, as opposed to the number 2 party, whichever it may be, is so large that it does not actually make a difference. So that is their contention. And I think from a market's perspective, people are talking about this, and this data point, the statistical analysis by IIFL perhaps should soothe nerves at the margin. These are the phases in which the election will be conducted. First 2 done, and of course, the others, of course, will follow as time goes by. The hope is, and we, of course, here at CNBC-TV18 certainly encourage everyone to go out and exercise your franchise, go out and vote, and of course, make these elections a success.
So we really have no real insight other than, I guess what is the catalyst that we are looking forward is more in terms of, say, post-government formation. I think that is a reasonable market consensus view that the current government is going to come in whatever shape and form. And so who will be the key ministries and what their key agenda is, I think is a bigger driver than, what the exact seat count, etc. will be, is our limited sense. So Not that we can do much about that either.
The low voter turnout. Well, be responsible, guys. Go out there, make it count, give that vote, and increase the voter turnout. That's all we can say. With that, it's curtains down on this edition of Editor's Roundtable. We'll be back bright and early on Monday morning. Stay tuned.